The number of companies appointing administrators soars as the post-COVID world hits the small and medium-sized business market. Federal Treasurer Jim Chalmers hints at a big spending budget, and children abandon free-to-air TV. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Monday, the 22nd of April, 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, after the show, you have an interview coming up today with Matt Waiter, who is the Chief Investment Officer, Asia Pacific at Morningstar.
Yeah, so it's all about asset allocation. Often we talk about investing in equities. We do a little bit of that with Matt, but it's mostly about how much do you put in equities, how much do you put in bonds, how much do you put in infrastructure and property, or at least is now a good time to be investing in those different asset classes. Asset allocation often gives you very, very critical to what return you earn over the longer term. And so certainly for any investor, this is a must listen, Michael.
Oh, I could not agree more. And of course, as you say, we are not an investing podcast and you should seek professional advice, but it is an interesting perspective from a professional who is doing this kind of stuff every day as to kind of some of the things to think about at this time. So it is definitely worth sticking around for. It is a must listen. The main story this morning, Sean, the number of companies appointing administrators hit a record high in March, rising to 1,131. It is the first time since 2015 that insolvencies rose above 1,000 in a single month.
And the number is up 26% on a year earlier, according to the Australian Securities Investments Commission. The corporate watchdog expects companies entering external administration to hit 10,000 this financial year, the highest level in a decade. Insolvency experts say the rush of insolvencies, which is expected to continue all calendar year, in large part is a hangover from COVID and the government subsidies used to boost the economy. As they've ended, companies have had to trade on their own terms. Cash flows become a major problem for many companies. In the 9 months to the end of March, nearly 8,000 companies entered external administration and around one quarter were construction related. For the month of March, construction insolvencies were the second highest on record. Accommodation and food services was the next largest category. There is a lot of pain out there, Michael, in that small and medium-sized enterprise space.
And there's also been a couple of very high-profile failures in just the last week.
Yeah, so Brisbane-based electric vehicle charging business Tritium, they've been on the show over the past couple of years. One of the directors was on the show. Well, it's gone into voluntary administration, failing to find a sustainable model after pivoting towards the US. The NASDAQ-listed company was originally considered an Australian success story, but its fortunes have plummeted, and there's already a process underway to sell the business and assets. A month ago, Prime Minister Anthony Albanese said Tritium's decision to close its Australian factory and produce its chargers in the US was a lost opportunity. Maybe. Well, it hasn't been able to make it work in the US either, and only after a month. Doesn't seem very long. Funny, Tritium is probably one of those businesses that the government's Future Made in Australia program might have looked at. Another one that might have gotten a look into that Future Made in Australia cohort is chemicals group Qenos. It called in voluntary administrators last week as well. Now, the plastic maker runs manufacturing plants in Victoria and New South Wales, employs about 700 people. Basically, the input cost to making plastic got too much for it, so it's closed down as well. There is a lot of pain out there among SMEs, and a bunch of them are going into some form of debt restructuring or administration.
And that, of course, then means a very uncertain time for those 700 employees, for instance, of that particular company.
Yeah, absolutely. And the Tritium people and all the companies that are going into voluntary administration, often the administrators will come in and cut costs, and that sometimes, regularly, means job losses.
Indeed. Now, local markets, how do they finish up on Friday?
The S&P ASX 200 closed down 1% to 7,567 points. There were losses across the large caps. In fact, all 17 of the largest companies on the bourse ended lower, led down by Macquarie, Fortescue and WiseTech. The four major banks dropped by 1% or more, as did Wesfarmers, Goodman Group, Woolies, Rio Tinto and QBE. For the full week, the market was down nearly 3%. Now, that's the worst single week in 6 months. Notwithstanding the ASX 200 hit a new record a few weeks back, the market is pretty much flat for the year. The good news, I suppose, is that futures trading suggests the ASX 200 will bounce somewhat today, helped by an apparent easing of tensions between Iran and Israel.
All right, checking international markets now thanks to Blue Chip Communication, the experts helping financial services companies market, communicate and grow. Visit bluechipcommunication.com.au. What's been happening over the weekend?
Well, Wall Street was stable after Tehran played down an Israeli strike on a military facility in Iran. The hopes are that the attack won't trigger reprisals from Iran, and as a result, bond yields fell and equities rose. The International Energy Agency said there was no damage to any of Iran's nuclear sites from the attack. That helped lower tension somewhat. Gold fell back from the $2,400 level. Brent crude fell back below $90 a barrel. Bitcoin gained a bit, while the Aussie dollar's fetching 64.2 US cents. Everyone's favourite stock, Nvidia. That's worth a mention this morning. It dropped 10% over the weekend. It was after a key hardware partner, Supermicro Computer, failed to give preliminary results. Now, 10% is a lot on the back of that. I just reckon there was nervousness around what's happening in Israel and Iran, and the fact that it's run so hard. So people were very prepared to sell it off. That's about $180 billion US dollars in value, much more than the total value of BHP.
That is staggering. Yeah. And Supermicro Computer sounds like a company out of the 80s, doesn't it?
It does.
It's like, this is so what we think is the future of computing, Supermicro Computer. Anyway, once again, that is what I took out of that story just then. Still, excellent. $180 billion. That is a lot of value.
Oh, amazing. 10% of it.
All right, we'll be back in a moment with the rest of the day's business news. Sean, Federal Treasurer Jim Chalmers has hinted that there might be a fair chunk of money in the budget for the future Made in Australia green subsidy policy. You mentioned this one before.
Dr. Chalmers was in Washington in recent days for IMF and World Bank meetings. He said the government is considering substantial investments, but they wouldn't add to inflationary pressures. Now, he said they were about making sure the economy can be more competitive and more productive, notwithstanding critics' fears that they are a return to protectionism. Previously, the government's played down the size of the investments, not over the weekend. The federal budget is just 3 weeks away. Dr. Chalmers said they'll include an updated monetary and fiscal strategy aimed at boosting national resilience against an increasingly hostile global backdrop.
Sean, you know how today, being Monday, we have a new episode of Fear and Greed, The Week Ahead out.
Yes.
And that features our resident economist, Stephen Koukoulas, who gets very excited about everything to do with economics and the economy. Do you reckon, when you say that there's 3 weeks now until the budget, can you just picture on the Kook's desk that there is a calendar that he's actually circled and he crosses each day off? It's like one of those kind of advent calendars for Christmas, except it's for the budget.
It's a budget. Jim Chalmers, a face of Jim Chalmers under every little flip that you push up at the end of the day.
Yep. Yeah, you open that little door, take out the little chocolate and close it back up, knowing that every day you're getting one day closer to the budget.
You have a very unusual mind, Michael.
Well, yeah. Well, I just go straight to chocolate, don't I?
You are a fiction writer. You write novels, fiction novels. And so sometimes where your mind takes you is a little unusual.
A little odd. And unfortunately, you have to go with me when we head off on these tangents. Let's get back on track, Sean. The preliminary auction clearance rate. I love how I say let's get back on track as though you're the one that took us off track. Like, come on, Sean, get back on track. The preliminary auction clearance rate across capital cities for the past week has come in at you got to say, a robust 74.4%. That's up from a week ago and continuing what's been a pretty strong run for the housing market this year.
Sydney came in at 74%, while Melbourne was a much improved 73%. If you take the final numbers, so what we're talking about at the moment is the preliminary clearance rate, the final numbers, Melbourne over the past month or so is averaging around 63%, Sydney's averaging around 70%. Back to those prelim clearance rates, Adelaide was the standout over the past week. It came in at 86.5%, Brisbane was 75%, and Canberra 68%.
Sean, this is interesting. In 2011, teenagers spent on average 75 minutes every day watching commercial television. Nowadays, broadcasters say that figure is just 13 minutes. That's an 83% decline.
Yes, and for children between 5 and 12, remember you used to put them in front of the TV to keep them amused? Well, they're at about 16 minutes, according to lobby group Free TV. It has many ramifications. And one of those is putting the government under pressure to change rules around major sporting events. Now, the government doesn't allow pay TV companies like Foxtel to bid for major sporting events until one of the free-to-air networks has had a chance to make an offer. We're talking about the Olympics, AFL, NRL, any Socceroos game, the Australian Open tennis. But the law doesn't include streaming platforms like Netflix, Stan, Amazon, Disney+. According to the Financial Review, some of those have started broadcasting sporting events, and live streaming is now 20% of all free-to-air viewing, with many new homes no longer even having a TV aerial. So why should free-to-air get a run at major sporting events when people aren't watching free-to-air anymore? It's a pretty good question.
It actually is a good question.
Mm.
And I don't have an answer for it.
No, but it just shows how, when kids are, teenagers, let's say, are only watching 13 minutes of free-to-air every day, many, many, many more minutes online in some capacity. I don't think my kids ever watch free-to-air. And, even the sporting codes they would probably watch on Foxtel. So I don't know that they would even know how to get to 9, 10, 7 or 2 or ABC.
No, I think you're absolutely right. It has been such a dramatic change in just over a decade.
Yeah, incredible.
Now, wait times for planned surgery in Australia's public hospitals has hit a new record at almost 49 days, according to a new report from the Australian Medical Association.
The AMA says Australians are now waiting almost twice as long on average for planned surgery than they were 20 years ago. The report also says emergency departments remain congested and the proportion of people who complete their emergency presentation in 4 hours or less is just 56%. Therefore, 44% are there for more than 4 hours. This 56% is the lowest number since 2011 and much worse than the pre-COVID years. According to media reports, the report found the national proportion of individuals receiving Category 2 planned surgeries on time has fallen to the lowest point on record. Now, Category 2, we're talking heart valve replacements, congenital cardiac defects, surgery of fractures. These aren't cosmetic or elective. These are necessary surgeries, and the long waits can cause serious pain and risk to patients.
Woodside's first quarter revenue tumbled more than 30% thanks to lower oil and gas prices, which have fallen from the highs recorded during Russia's invasion of Ukraine.
Revenue for the March quarter fell to just under $3 billion. For the quarter, I still think that's a lot of money. It was lower than analysts' forecasts, and it sent Woodside's share price sharply lower initially before it recovered to close flat on Friday. Remember, Friday was not a good day for the market, so in actual fact, Woodside outperformed. The average realised price of a barrel of oil was down from $85 12 months ago to $63 a barrel. Woodside's AGM takes place in Perth on Wednesday. The company's set to face angry shareholders over its climate strategy. Now, some large shareholders have already indicated they'll vote against Woodside's transition plan and the reappointment of Chair Richard Goyder. While talking about Richard Goyder, on Friday he announced he'll bring forward his retirement as chair of Qantas to this week. He was supposed to finish at the end of June, but that very much is the end of the clearing out of Qantas' senior management.
Okay, turning to international news now, and the US House of Representatives has approved over $60 billion in military aid for Ukraine in its fight against Russia in a major breakthrough after months of inaction on Capitol Hill.
The Ukraine aid was part of a $95 billion package of national security bills that also includes $26 billion for Israel and $8 billion for the Indo-Pacific region, as well as a bill that could result in TikTok being banned from US app stores. According to the Financial Times, many Democratic politicians cheered and waved Ukrainian flags on the House floor when the legislation passed. This has been going on for months. US President Joe Biden said the vote sent a clear message about the power of American leadership on the world stage. The aid comes at an important moment for Kyiv in its war against Russia's invasion. Moscow's troops have seized the initiative on the battlefield recently, exploiting Kyiv's lack of arms and munitions after the failure of Ukraine's counter-offensive last year. And as US supplied military assistance was blocked, that will now flow through to Ukraine, which obviously will benefit that country.
Sean, the world's biggest election has begun, with up to 1 billion Indians heading to the polls over the next 6 weeks, and Prime Minister Narendra Modi is expected to be returned for a third term.
India is the world's fastest growing major economy, and Modi is considered the architect of the success. His BJP party is focused on accelerating growth and addressing stubborn problems such as low levels of investment, youth unemployment, and rudimentary infrastructure, especially in the regional areas of the country where the bulk of the population live. Now, BJP also wants to encourage Hinduism, the religion of about 80% of the population. The logistics of this election are quite phenomenal. There are 543 seats in India's lower house, and whoever wins most gets to pick the PM. The election goes for a long time because of the logistics involved. Accessing the 969 million registered voters takes time. Also, rules mandate there needs to be a poll within 2 kilometres of every habitation. So where people live, there needs to be a poll within 2 kilometres. That means 1.1 million polling stations served by 15 million electoral agents who move from place to place starting last Friday, finishing on June 1. Then the votes are counted. The votes start counting on June 4. Quite an amazing exercise.
Just the logistics of that. That is something else altogether, isn't it?
1.1 million polling stations. Incredible.
That is just amazing. I love that there's 15 million electoral agents. The size, just the number of people there is equivalent to the voting population of Australia. Almost.
That's right. Yeah. That's true.
That's incredible. Last one, Sean, we kind of almost touched on this before when we were talking about people not watching commercial TV anymore. Netflix has posted its best start to the year since 2020, attracting more new customers than expected thanks to a strong slate of original programs and a crackdown on password sharing.
Oh, I know this is one of your favourites, Michael. You're very upset about the crackdown on password sharing.
Well, I haven't seen any of the new shows on Netflix, any of that strong slate, because I've been locked out of Netflix. Not that I was password sharing. I was locked out for unrelated reasons, sure.
Right.
It just coincided with that timing. Please go on.
Netflix added 9.33 million customers in the first quarter of the year from all over the world, though there was particular strength in the US and Canada. Those new subscribers helped Netflix beat forecasts for sales and earnings. The growth is in part due to Netflix's crackdown on password sharing, according to Bloomberg. The company estimated more than 100 million people were using an account for which they didn't pay. Interesting. Also helping has been a bunch of hit shows, including limited series such as Fool Me Once. Not so sure about that one. Griselda. Okay. Dramas The Gentleman. Didn't like that one. Three Body Problem. Never seen it. And the reality show Love is Blind. No idea on that one. The only problem is that the outlook for coming months isn't as good for Netflix. The group's share price fell sharply over the weekend. So that streaming service accounts for about 8% of TV, so Netflix, not streaming services, Netflix itself, but 8% of TV viewing in the US.
That's a lot.
Huge amount, yeah.
That is huge. I will just point out, do you remember back in 2017 when Netflix, I think they tweeted it, didn't they, that Love is sharing a password? Do you remember that?
Oh, I don't know.
Oh, it's the thing that people often kind of hold up to them and going, what changed, Netflix? You were so kind of pro-sharing and pro-love and all this kind of thing and sharing passwords and kind of keeping families together, all that kind of thing. And now there's this crackdown.
Money.
I suppose money changes a lot of things, doesn't it, Sean? Anyway, I don't have a bee in my bonnet at all, Sean, and instead I will suggest that we move on with haste to the Fear and Greed Daily interview. Your guest today is Matt Wacher, Chief Investment Officer, Asia Pacific at Morningstar.
Yep, sure is. We talk about asset allocation, about how you handle bonds in the current environment, equities in the current environment, property, infrastructure, that type of stuff.
Yeah, and Matt does a really good job of just running through each of those areas as you kind of ask him about them. He just knocks them all down one by one. It's really, really interesting. It's well worth a listen if you're an investor. It is up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. And don't forget about Fear and Greed the week ahead with Stephen Koukoulas.
Yep, that's all. Well, this week we find out March quarter inflation figures, and Stephen's very excited about that.
Yeah, he certainly is, as well as the budget in a few weeks with his advent calendar. Thank you very much, Sean.
Thank you, Michael.
It's Monday, the 22nd of April, 2024. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.